Hello, everyone. This is Peter.
And this is Ellie.
And you're listening to Pineapple Chunks. And I am officially bald now. It's great.
I'm officially not bald. And today we're going to be talking to you guys about the 4 likely scenarios that can happen depending on who wins the election.
Depending on who wins the election. Is it going to be Trump? Is it going to be Biden?
It's not going to be Kanye, I can guarantee you that.
Well, one thing's for sure is that all betting polls and national polls say that Trump is not in the lead and Biden is ahead of Trump. Substantially, actually. So, but nonetheless, we are people who are looking at money and we're looking at where we're going to be investing in depending on who wins. And you need to be ready for those trades, you know? Like you can't, the next day, once you know who wins, you need to be ready to have your money set up for the next 4 years.
Right. All politics aside, but not really aside, because they can make you a good amount of money if you play your cards right.
But we're definitely going to be as apolitical as possible in this video because the politics that we like is green. At least the ones that I like. Do you like green politics?
I like the Bulls and the Bears. So depending on who wins the election isn't necessarily enough. We also have to see who wins the Senate, right? Because the House is most likely going to stay Democratic. And depending on if the Senate is Democratic or Republican, and depending on who wins the presidency, we have 4 different outcomes, right? And each outcome portrays or paints a different picture in the stocks that you should be putting your money into, or at least the industries that you should be looking into.
The likely U.S. election scenarios, based on the macro implications, that's what this chart is ultimately saying. It shows you here that if Biden wins the presidency and the Senate goes Democratic, the fiscal stimulus will get passed, but it'll be likely that they will add an additional stimulus to, whatever is passed before the election. We don't know. The Democratic Party is pro-stimulus. Ultimately, the macro scenario is elevation. Build back better around that, ultimate scenario. People are going to have healthcare. People are going to have better housing. There's going to be a huge housing boom.
Second scenario, Trump winning the election and the Senate being Republican, which is the polar opposite of Biden and the Senate being Democratic. So if that happens, there's still going to be a lot of money injected into the economy through public investments, but it's mainly going to go through into expansion purposes instead of straight growth elevation ideals.
It's not as much money into the economy as well. It's
still a good amount,
but still more incentives, more corporate tax cuts. Think banks are going to do very well. Corporations are going to do well. Investors will be more incentivized to invest more into opportunity zones and things of that nature. So expansion being like expansion of opportunity, expansion of, let's say widespread gentrification. I don't know, but just things that are ultimately productive, pro-growth.
Advocating competition.
And the difference between expansion and elevation, although they are similar, they are still different. Expansion is more in the investment side and the investing of people and the investing of communities and the growth of money but for public good as well. But still, for the elevation side, though, it's more of more
looking long term into like how we can make things better for future generations.
And let's just build now and let's figure it out. I know that if Biden wins, there's going to be a huge push to, subsidizing housing for people and, government subsidies, especially with fiscal stimulus. Subsidies, think of an FHA loan.
What's an FHA?
So an FHA loan is a Federal Housing Association loan. So it's a loan that's approved by the government. So it's FHA loan. Let me get you the exact definition. And it basically allows people who don't have great credit scores or don't make that much money get into a house with a very low monthly or down payment. So ultimately, you get a low down payment, low closing costs, and easy credit qualifying. So it allows more people to get into housing and provides more opportunities so people can have property. I mean, the American dream. Okay. And ultimately, it's insured by the Federal Housing Administration right here, but it's not backed by the government or anything.
And this is a type of subsidy, an FHA loan?
Well, subsidy being it's a subsidy toward an individual. It's subsidized being this program lets lenders know that if anything goes wrong, the Fed is going to step in and solve the issue, just like it did during 2008, or just like
some safety,
or exactly, and or just like it did. But I mean, 2000 was crazy. But FHA, yeah, it adds a little bit more of security. That's what an FHA loan is. It's a government program that almost guarantees a loan, but doesn't necessarily back it, and it allows for more people to get into houses. Both scenarios are positive, us being apolitical as from an investment standpoint, but you need to know what side you're on, and you need to know what trades you're going to make. So ultimately, and most investors in this Bank of America study, actually 23% said they favor a Congress and presidency controlled by different parties.
It's not much.
This is apparently the second lowest reading in history for having a presidency and Congress controlled by different parties. But if you don't know about that and you don't really care about any of that stuff,
then you should stop listening now.
Or listen to this next part, where the study also went into how fiscal stimulus is most effective during times of uncertainty, much like we're dealing with now. And the reason...
So the timing is perfect.
The timing is perfect because we're dealing with a time that is uncertain due to the coronavirus, not having a vaccine.
It's almost like we live in the Matrix. This is so coincidental.
And also the contesting of the presidential election. So there's a lot of uncertainty. And so this chart here, let me just pull it up. It says public investments, chart number 4, it says public investments is most effective in uncertain times. Percent change for an increase in public investments of 1% of GDP. And right now, GDP in the U.S. is around like 1.9 trillion. 19 trillion. Around 19 trillion or 18 trillion. We went down from like 21, 23. Actually, let's see. What's the U.S. GDP really quick? Actually, U.S. GDP now. Just really quick. 19.4 trillion. So basically, if we get a stimulus of 1% being 1.9 trillion or 1.8 roughly, it says that during high uncertainty, the GDP will rise at a rate of 2.7%. And then also that will spill into private investments and will raise private investments of 10.1% and also raise employment during high periods of uncertainty of 1.2%.
And so this chart is essentially saying that the public investments that come from the government fiscal stimulus during times of high uncertainty is either going to, that money is either going to pour over into GDP, private investments, or was it Social Security?
Or employment. So it's private So it's GDP, which is positive, private investments positive, and employment super positive. So, I mean, the stimulus is going to happen, whether it happens before the election or after. It looks like it's going to happen after the election. Mm-hmm. And if you're wondering where the data is coming from, and so this is a Bank of America research committee, but it's also citing the International Monetary Fund study, which found that public investment is most effective in periods of high uncertainty, like we just said. And they're using data across 107 countries over the past 30 years. The study found that on average, new public investments worth 1% of GDP, like we said, raised economic growth over the subsequent 2 years by 2.7%, private sector investment by 10%, and employment by 1.2%. So the time frame, I was actually wondering that too when I was reading the chart, is over 2 years of periods of high uncertainty. So if we put the stimulus bill, it doesn't matter. It's going to be after election or before, but it's after election. The effects of it are going to be positive for the next 2 years. GDP is going to increase by 2.7%, and employment is going to increase by 1.2%. Let's see what's
more estimated based on this data, but yeah, it's looking pretty positive.
But it's still positive. Stimulus is still positive. So if we have 19.4 times 1.027, our GDP would go up to like 19.9 trillion dollars.
Oh, that's so close to 20.
It's still good. So that being said, that's a very interesting perspective as to the election, although it doesn't have anything to do with the election scenarios, does it? I mean, more stimulus or not, I mean, the Republicans are okay with a $1.8 trillion deal. So that's already 1% anyway, and the Democrats just want a little bit more. They want like 2.2, and they're probably asking for a little more too. Like they're in between that range, but 2.2 is probably like more realistic.
And depending on the scenarios, right? If we get Democratic, or Republicans, it's going to be a lot easier to pass these agreements, right? Unless we get Republicans versus Democrats, and it's really hard to like agree on like a set number.
Well, the thing is that so like there's a certain things that the Republicans and Democrats are arguing about in the stimulus deal, whether it be tax credits for children or it be like insurance for companies or the consumers and whatever. But at the end of the day, the biggest concern is so the Republicans are like we'll approve a $1.8 trillion deal, we'll give you stimulus checks and whatever, or I think they're denying the stimulus checks. But they they're okay with the unemployment. But there's a lot of discrepancies. But based on that, the Republicans are saying, we'll deal with it later. Let's just get a deal done, and
just put it on the rug and then
yeah, exactly. They're just like we'll try to, and then if we need it later, we'll like get that done. Democrats are saying no, let's get it all done now because they don't think it's going to happen, especially if they lose. So, but if they win and get this deal done now, before the election, and then after election they win. After inauguration or whatever, then they have the ability to even get more money. And so that's another aspect that's
I think the main takeaway here is we want money from the government to go into our markets and make our pockets bigger through our investments, right?
Absolutely.
All right. So let's dive right into the different scenarios and how they're different from each other and what industries they're going to be affecting the most. So Biden winning with a Democratic Senate.
Right. So think green energy. So companies like Tesla. I have a company here that I wanted to share. This is kind of mixing in with real estate, but KB Homes, they're a home builder. They market to the millennial group and the Gen Z group, but they use solar panels in their homes, and that's also a very big positive. So right here, let me just pull it up. Okay, so the first one that we're looking at is a company called Ameresco. Ameresco is an energy performance contract company, which basically they figure out for big corporations, look, we're going to find a way to make your energy more efficient, whether it be changing, from to solar panels to, cutting costs in this area or changing materials. Their thing is they're going to get you the most energy efficient as possible. So they're a consultancy in that sense. And what's great is that
they're public.
They are public. It's okay. Ameresco. Let's see what the
ticker is. So I can buy them on the stock market right now.
Right. So let's see what the ticker is. Ameresco. Ameresco ticker. It's AMRC right here. And they're trading at $42.74. They've been trading upward. But basically, the performance contract being that if they get you tax credits or the amount of money they save you, say they save you $2 million or they save you $2 million and they get you a certain amount of tax credits or something, they'll split that with you, maybe like 50-50 or 70-30. Nice. So that's what's interesting about the performance contracts. And so they're really, elevating new industries in that sense. So that's a very cool company that's definitely going to benefit. They're already, like national polls are showing for the past couple months, and betting polls are showing that Biden is likely to win. So it's no surprise that a company like Ameresco is trending upward. Another company is AES. AES. And they're a company that they're a power utility company, and says they're a Fortune 500 company, and they distribute electrical power. They set up solar installation, wind generation batteries, and they just recently did a joint partnership with Siemens, which is a huge company, and they acquired another company, a 50-50 partnership of a company called Fluence, and they're the largest battery deployer out there. And so they're a company that's likely to do well, and they have they've been around for a long time. They were, founded in, let's see when they were founded. I believe they were founded in the 80s. So they have a lot of roots. They have a lot of roots in the energy space. So they have 1981. So that's another great company, and they're trading at $20.
It's a cool logo. It looks like a path.
65 cents. AES Corporation. Yeah, dude, it looks like a great logo. That's a very actually, what would that even try to we are the energy. Yeah, because the thing about them is that they weren't always electric. Like, they are transitioning into a more renewable energy space. So maybe that's why they're
that's
doing
probably why
like
their stock price is going up too.
That too. So
they're
let's see
pivoting
over
hard.
year to date. Yeah, especially they haven't even got back to their levels, but they're transitioning. So they're definitely going to be able to pivot better.
Oh wow. So if they pass those original levels, that's a really good sign.
And if Biden wins, it's just better for them. And the all-time best trade is Tesla, for sure, because of their battery power, their innovations in battery. They also are able to get the best engineers in the world. Like, any engineer graduating from the best engineering school is
they probably want to work.
They want to work at Tesla. They ask them, like, where do you want to work? They want to work at Tesla or SpaceX or Neuralink. And when you get great talent like that, man, you invest in a person who is able to garner that much.
Yeah.
So Tesla's the all-time trade for a Biden win in that sense.
Sorry about that. The pizza guy's here.
Pizza guy's here.
So the losers, if Biden wins the election and the Senate becomes Democratic, are mainly going to be the media companies, right? Because we've seen that over the past 4 years, media companies have gone up 400%, as opposed to like a 3 or 4% the 4 years prior to that, which was when Obama was president. So it seems like a Republican president spikes up the media companies. So Biden winning the election there would probably have a huge effect on the media companies in a negative way. Another thing would be health insurers, because we will be
switch more to like public.
Yeah, less
rates.
Competition, less incentive. It won't really be worthwhile for people to work their butts off and go into a lot of debt to become doctors, because the competition and the incentives won't be there as much. And another sector is probably the megatech companies, so Google, Apple, all those conglomerates.
Do you think the antitrust is going to hit them harder?
I think it's going to hit them harder, but I also just think that they are getting rid of a lot of competition in all those sectors. And look at Google. Google's already being attacked right now.
I don't know. I think they're going to do fine.
I don't think so. I think
they might get taxed more. That's for sure.
Yeah, they might get taxed more, but they've been getting a lot of attention in less than 6 months.
But I wouldn't necessarily
It hasn't been as spread out. It's all been very concentrated, and I think it's only gonna get worse.
I wouldn't necessarily short them.
No, I'm not saying short those companies. I'm saying that there are better investments out there. Probably, especially because these companies already, their market caps are massive at this point. Like, the returns of investments you've been getting on I don't know, look at their PE ratios. Like, you're not really going to be doubling your money in 5 years with these companies. Or you might actually, but it's a lot of slow growth, just because they are in an industry that has already experienced their fast growth state. They're in a slow growth industry, and they are essentially slow growth companies because they've reached such a large market cap.
So I just want to clarify one thing. The trades that we're making are strictly trades. They're not long-term picks. They're not portfolio companies. We still have our long-term picks. We're more than happy to share those in another episode if y'all are interested. But they're like the typical Apples, Amazons, Teslas, those tech companies, Zoom and everything. They're going to continuously do well. But for trades, as far as election trades and where you can get a good return, this is what we're talking about. We're not necessarily, at least I'm not necessarily adjusting my portfolio for educational purposes. So that being said, just thinking if Trump wins, corporate tax is going to go down. Banks are going to do better because they're going to be able to have more money. It doesn't necessarily mean that oil or green renewable energy companies are going to do worse. It just means that there's might be, for a trade, more profitability toward a company, say like ExxonMobil, that is not doing so great right now, but if Trump wins, is likely to pop higher than, say, Tesla, which is really gonna do fine. But if Biden wins, and Tesla's gonna pop even more because there's anticipation. Investors think that the tax credits are going to be beneficial to the company's earnings reports, and ultimately for investors to want to be in it.
Trump winning with a Democratic House and whatever Senate, I mean, that can still lead for some common ground between Trump and the House to offer transformative pro-growth legislation. So, I mean, it's not the end of the world. I think in either case, if the Senate is Democratic or Republican and Trump wins, we won't see too much stagnation.
Well,
maybe
I
the
wonder
House,
what that looks like though, if like it is opposing, because we're saying, like, at least from an investment standpoint, where you're saying, at least what I heard from what you said, is that if Trump wins and has the Senate as well with the Republicans, then that's expansion. That's great as an investor. But if Biden wins and he also takes the Senate and the Democrats take the Senate, that's also great too from an investment standpoint. But yeah, like I don't understand. I don't know what a stagnation period would be if there's stimulus and the Democratic Party controls the Senate and Trump is still president.
Well, a stagnation in the sense that the government will probably still have to offer fiscal aid for its citizens. It just
won't be as much.
It won't be as much. And it'll probably cause some sort of deflation, because if you're already offering aid, you kind of have to keep offering aid. You can't just stop offering aid when your political parties are disagreeing with each other. That's just going to cause a lot of chaos. And that extra printing of money is going to bite us in the butt years down the line.
Also, I can see how stagnation would be, like, also for bills being passed. Like, things aren't necessarily going to go through a lot.
Things are going to get slow. I mean, the government's slow as it is. They take forever to do everything. So if you have two parties opposing each other, not really getting stuff done, you can only imagine how much printing of money would have to be taken into effect to keep the economy alive.
Right now, you can see this is a betting poll called Predict It. And Predict It is a nonprofit betting website, actually from Australia, and it allows you to see what people are betting on. So right now it says the 2020 presidential election, people are betting that Joe Biden is in the lead. And this is a very renowned betting site, and people who bet on here do a lot of research because they're putting their money where their mouth is. Let's see where they say the Senate is going.
Can you imagine putting bills in your mouth?
So they're saying
disgusting.
That
not in this pandemic.
So they're saying that the Democrats are going to get into the Senate. So they're saying that, wow, so it looks like not down 3 cents, but nonetheless, it looks like the Senate is likely to be Democratic, at least based on these polls, on this poll. So if we are in an era of expansion, I'm buying a bunch of Tesla. I'm buying TAN, TAN, ticker TAN.
As long as the buzzword green is
solar. No, not because model. You don't want to also get into like a Nikola.
I know.
Like where you have to deal with a Trevor
Milton. You
want
to get into a Nikola for sure.
So ticker TAN. TAN is also another solar company, Invesco Solar. It's an ETF. So an ETF being like, it's a bunch of different solar companies packaged into one product. Exchange traded fund. Yeah, exactly. So you get to benefit from the whole market. That's a good one, instead of picking the same trades. Also, NEE, NextEra Energy, is a great trade if Biden wins, and looks like he might win. But say the likelihood of the Republicans getting the Senate is only 30 cents. You know what I mean? But let's see that 1 cent for Republicans winning the House and Democrats winning the Senate, and then 20 cents for Republicans winning the House and Republicans winning the Senate. So there's still more of a chance that the Senate can be taken from. No, it looks like there's still more odds on the Democrat side. Pineapple Chunks newsletter and podcast reflect the opinions of only the authors, who are not associated persons of any financial institution. They are meant for informational purposes only and are not intended to serve as recommendation to buy or sell any security in a self-directed exchange account or any other account, and are not an offer or sale of a security. They are also not research reports and are not intended to serve as the basis for any investment decision. Any third-party information provided therein does not reflect the views of Pineapple Chunks LLC or any of their subsidiaries or affiliates. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. Keep in mind that while diversification may help spread risk, it does not assure a profit or protect against loss. There is always the potential of losing money when you invest in securities or other financial products. Investors should consider their investment objectives and risk carefully before investing. The price of a given security may increase or decrease based on market conditions, and customers may lose money, including their original investment. Pineapple Chunks LLC is not a member of FINRA, SIPC, or the SEC.